Well, let's look at the economic news. The September ISM non-manufacturing index came in at 53 for September, from 53.3 in August. The employment index decreased to 48.7 from 51.6 as bad news on employment. Positive news for the service sector generally, because any reading above 50 indicates expansion. Still, it's not what you'd call a good report. ADP reports private sector employment gained more than expected, rising 91,000 in September. Economists were only looking for a gain of about 75,000. On the flip side, Challenger, Gray & Christmas says the number of planned layoffs at firms in the U.S. in September jumped to 115,730 last month, highest in more than 2 years. Double the August total, more than double the August total of 51,000. So those reports coming ahead of Friday's monthly jobs report. The report might show a slight improvement as Verizon workers return to their jobs, but otherwise there's a fairly strong chance that the report will continue to disappoint. So the economic news, was that enough to lift the markets? Nah. Let's take a look at today's banking news. The financial sector, major banks were generally moving higher today. What was the news behind the banks? Well, 3 law firms are seeking participants in a class action lawsuit seeking damages from 13 lenders for alleged fraud against borrowers seeking VA home loans. The suit charges that the lenders charged fees for their loans which were unallowable under VA mortgage rules, an action that technically, according to the suit, invalidated the VA guarantee. The premise for the suit rests on a VA rule that certain fees typical to a real estate transaction, attorney's fees or settlement closing fees, are not allowed in closing a VA loan for the purpose of refinancing. The defendants allegedly charged these fees but disguised them as allowable fee entries on HUD settlement statements. For example, the lender might charge a settlement fee of $400, but rather than putting that amount on the line provided in the statement where it would be disallowed, it would be bundled into the fee for a title search, increasing the fee from what might be an allowable $150 charge to $550. Plaintiffs' attorneys charge that veterans don't know what the usual and customary fees are for those allowable fees, and the VA relied upon the banks to comply with VA regulations rather than digging into every loan transaction. And basically they're saying the banks took advantage of that reliance to cheat veterans and taxpayers. According to the court papers, in the last 10 years, more than 1.2 million of these refinanced loans have been made to veterans and their families, and up to 90% of them may have been affected by the alleged fraud. Listed as the defendants, Wells Fargo, Bank of America, J.P. Morgan Chase, GMAC Mortgage, Citi Mortgage, SunTrust, Washington Mutual, PNC Bank, Countrywide, Mortgage Investors, First Tennessee Bank, Irwin Mortgage, and New Freedom Mortgage. Great. Hasn't been proved yet, but if it is proved that they've been defrauding veterans, what do we got to do? If this actually comes about that they defrauded veterans during a time of war, what do we have to do with these bankers? Anyway, according to another news on banking, September 30th report from the Department of Housing and Urban Development's Inspector General, the agency recommending pursuing legal remedies against Bank of America. HUD runs the Federal Housing Administration, and the FHA insures mortgages on loans to borrowers who can't find traditional financing. Lenders can ask the FHA to cover losses if borrowers default. So the agency has been stepping up its scrutiny of these claims. According to a recent HUD audit, Bank of America should perform a full review of all mortgages that defaulted and could face fraud proceedings after its countrywide unit submitted faulty data to back up claims for reimbursement on federally insured mortgages. B of A denies the accusations. Meanwhile, B of A has still been having problems with its website for the past 6 days. Customers still experiencing delays, occasional problems with access. This after that idea to charge $5 for using an ATM for purchases, an ATM card, debit card for purchases. And Bank of New York Mellon sued by New York federal and state prosecutors who accused the bank of cheating clients in foreign exchange transactions. Meanwhile, Federal Reserve Bank in San Francisco conducting hearings on Capital One's proposed $9 billion takeover of ING Direct USA. That's the online banking unit of ING here in the United States. Consumer advocates claim Capital One is an aggressive credit card company that preys on low-income borrowers. And if Capital One takes over ING's online banking unit in the U.S., the combined banks will pose a systemic risk to the economy. Now, under the Dodd-Frank financial regulatory overhaul, the Fed must examine whether major bank mergers would endanger the economy. When the risks outweigh the rewards, the Fed must block the deal. Capital One says it offers the most consumer-friendly and transparent products in the industry. Capital One goes on to admit that about one-third of its credit card portfolio carries the subprime label, and they're heavily involved in the subprime car loan business. Subprime loans at usurious interest rates. Problem? What problem? Okay, let's take a look at transparency here. The SEC has sent a letter of reprimand to Wells Fargo, telling them their risk factor disclosures to investors were too vague to be meaningful to investors. The SEC says they have to actually say something in their disclosures. Just how vague was the disclosure that Wells Fargo sent out? Here are a couple of lines from that disclosure. Wells Fargo said, "Our financial results and condition may be adversely affected by difficult and business economic conditions." Really? So let me see if I got this right. Difficult economic conditions might make it more difficult to make money. Wow. Okay, how about this one? Our ability to grow revenue and earnings will suffer if we are unable to sell more products to our customers. Really? Wow. So it might be difficult to grow revenue if you can't sell things. Seriously, they should start teaching this stuff in the business schools. I mean, that is almost the very definition of revenue. What's next? Rain is wet. Phoenix might be hot in the summertime? By the way, earnings reporting season for banks kicks off on October 13th with J.P. Morgan Chase. Earnings estimates for the financial sector have been ratcheted down from a month ago from about 14% gains to just 4% gains. It might be nice to read disclosures that explain how business can deteriorate that much that fast. It might be good to have relevance and transparency, but that's not what the banks are about. The only thing banks earn honestly is their notoriety. And that's just the news on banks for today. And with all that negative news, almost all of the big banks' share prices moved higher. Go figure. And so, 19 days ago, a few hundred people camped out in Lower Manhattan to protest the financial system. They made no demands. They did not affiliate themselves with a political party. The whole protest was somewhat vague. They were protesting Wall Street. And because of the proximity of the protest to the Federal Reserve building, it was a protest against the Fed. This was part of the beauty of the protest. As soon as they make a list of demands, then we can all disagree about the rightness or wrongness of the demands. As soon as they affiliate with one group or another, then we can ding them for that relationship. The protests have spread to L.A. and Washington, D.C., and Chicago and Seattle and Denver and Albuquerque and Connecticut, and now unions and politicians and celebrities have joined in. On Monday, remember I told you about Anonymous warning that they were going to erase the New York Stock Exchange from the Internet. I'm not sure what that actually means, but maybe we'll find out next Monday, maybe not. I just get the feeling that this whole Occupy Wall Street thing is about to take on a different tone. I would love to see a nonviolent protest with no demands and no affiliations. The powers that be don't know how to deal with a nebulous, nondescript opposition. There is no question the protests have struck a nerve, but now the whole thing is going to be dissected, chewed up, spit out. Maybe the protest can survive. Maybe some good will come out of it. Time will tell.